Hi Rajan, it's nice to have you in our webinar series. And I think Rajan doesn't need any introduction, but just to introduce, he's the MD of Sequoia and he's leading the Sequoia search program. And Rajan, welcome to the show.
Thank you, Saurabh. Good to be here. Thank you for inviting me.
So my first question is relating to Sequoia search only. What is Sequoia search and how is it different from a normal venture capital or angel investment setup?
Yeah, I know it's a good question. So, Surge is a seed stage program that was launched by Sequoia Capital India in March of 2019. So about 18 months ago, right? And it was launched to address what Sequoia had seen to be the most significant challenges in the seed stage ecosystem in both India and Southeast Asia. So Sequoia Capital India invests in both India, South Asia, as well as Southeast Asia, like countries like Singapore, Indonesia, Vietnam, etc. And those constraints really fell into a few different areas. First was capital, right? As many of you who are seed stage founders would know, even today, despite all the progress we've made in India as an ecosystem, it takes several rounds, 2-3 rounds of capital of angel pre-seed sort of financing before you can get to a Series A, right? So you might raise 1 crore, then you raise 2 or 3 crores, then you have to raise another 3-4 crores before you can get to a Series A. And what that does is it takes away a lot of time from either, if you're a single founder, a huge amounts of time from the founder. Or if you're two founders, one founder is pretty much all they're doing is fundraising. So that was a constraint because you can't really focus on building the company. Second, despite again the progress that we've made as an ecosystem, there isn't as much sort of knowledge about how to build a company, sort of an enduring company the right way, right? What are the design choices you should be making, whether it's the kind of people you should hire or the kind of culture that you should be. How do you think about hiring your first set of engineers? How do you hire product managers? How do you get to product market fit? So there wasn't as much knowledge despite, the progress that we made. Third, lack of mentors, especially, very difficult to get access to very high quality mentors. And then finally, whenever you do need to get to your next round of capital, it would take a long time to raise your Series A, right? So what we said was, let's try to address all these constraints in a very systematic and structured way. So Surge really is got a couple of components to it. One is capital, right? We basically invest $1 to $2 million, depending on the company, in each company, and we invest the capital upfront. So when we decide to invest, we actually invest the capital. Then we have the Surge program, and the best way to think about it is it's a founders academy where it's over 14 weeks. We basically go very deep into all the different aspects of building an enduring company, right? So we used to run this entirely offline. Before COVID, we start by spending a week together in Singapore. Then all the founders would go back to their home bases. And then about a month later, we'd get together for a week in Bangalore. A month later, we'd get together in Shanghai, and then in Beijing, and then a month later, we sort of meet in Silicon Valley. But obviously with COVID, with our third cohort, we couldn't do any of that. So we basically took Surge entirely online. And so now it's basically an online program. In fact, the fourth cohort of Surge starts in November. Today is when applications close. So Saurabh, this is quite timely for me to be talking about Surge because midnight today, our applications closed. But now it's entirely online. So, and on our fourth cohort, which will start in November, is also going to be entirely online. And what we do is every Thursday from 9 a.m. to 5 p.m. India time. So if you're in Indonesia, it's hour and a half later, we spend one full day once a week together, right? And we go very, very deep on different aspects of company building. So it could be, how to get to product market fit. What does it really take? It could be, how do you think about your GTM? How do you hire first salespeople? How do you think about do founder-led sales? It could be growth marketing, right? What are the different ways to think about growth marketing? How do things like SEM or Facebook marketing or TikTok marketing work? How do you actually think about product-driven marketing? So we pick different topics. So think about all the different aspects of building a company, right? Both the 0 to 1 journey, which is what's most important for our Surge companies, but also to build a enduring company over a long period of time. So for instance, we spend a fair bit of time talking about, how do you think about building a board? How do you think about board management? All those kinds of topics. So that's the second part. Third part is we provide a lot of hands-on support in areas where startups need it. So Sequoia as a firm, right, we have sort of lots of extensive capability in areas like hiring, in marketing, in legal, in finance, and in tech. We had the CTO, Ajay Gore, who's the CTO of Gojek, which is a decacorn in Indonesia, just joined Sequoia to be our CTO, right? So, and basically, so we have a set of technologies to help our companies think about everything from how do you think about architecting a platform to how do you hire engineers and so on and so forth. So that's sort of the third part. And then the fourth one really is whenever you need to raise your next round of capital, we have something called Upsurge, where twice a year we would get about 40 of the top Series A investors. So investors in India like Lightspeed, Accel, etc. Investors in Southeast Asia, investors from the US like Tiger, and so on. And then as well as China, Chinese investors obviously now can invest in Southeast Asia, not in India. So we get them together and we set up one-on-ones for all our startups to meet investors who have interest in their business and who they're interested in. So next week is actually Upsurge for our previous cohort, Saurabh. And so we have 40 investors. And I think it's Wednesday, Thursday, and Friday, half a day. We have most of our companies are meeting between 16 to 22 investors. So it's 45 minutes each. And what that does is it helps you accelerate your fundraise process, right? So whenever you're ready, whenever a search company is ready to raise their Series A, they come to one of these Upsurges, and it helps them accelerate their fundraising process. So that really is what Surge is. It's a long answer. We launched it in March of 2019. We now have completed 3 cohorts. Our first cohort was 17 companies. Our second cohort was 20 companies. Our third cohort just finished is about 15 companies. So we have 52 companies in Surge so far. We have about a little over 100 founders, and we've invested from Surge a little over $100 million into these companies. But what's very interesting, Saurabh, is our Surge startups that have raised Series A have raised over $300 million of external financing, mostly in Series A rounds, as well as a few of them have raised Series B rounds. So fundraising is not really a metric for success, but at least that shows us that the companies are actually are surging, right? They're beginning to surge because their growth has been quite good, and they're also being quite fortunate to be able to raise funding. So we are very excited about Surge. We are also a startup, so it's still very early days for Surge, but we are very excited to see the quality of the companies. You're on mute, Saurabh.
So Sequoia is very famous, but can you give some, like, I know many people in general, they don't know much about Sequoia except for the fact that it's a big brand. And what is the secret of Sequoia? What is the secret of funding? Why is it so successful globally? If you can tell about that. And a brief
I think it's a good question, Saurabh. So Sequoia is a venture capital firm, global venture capital firm now. Started in Silicon Valley 48 years ago, right, by Don Valentine, who's the founder of Sequoia Capital. And Sequoia was very fortunate to be very early investors, the first institutional investors in a whole set of truly legendary global companies that all of you know: Apple, Cisco, Google, WhatsApp, Airbnb, Stripe, Zoom. Many companies like this, right? So large. So we've been in business for 48 years in the US. About 15 years ago, 2005, Sequoia actually launched in India. So we've been in India for about 15 years now. We have about $5.6 billion under management that we've invested in startups. So Sequoia basically we're an idea to IPO firm that partners with startups from the idea stage all the way through IPO. So we invest only in tech and tech-enabled companies. We could invest as low as $1 million, and we could go in companies, we could also invest several $100 million per company. So that's sort of, we invest only in technology. We invest in technology startups. We like to partner very, very early. It's never too early to talk to Sequoia. In fact, in our second cohort of Surge, out of 20 companies, 6 of them were pre-launch when we decided to partner with them, right? So we like to go very, very early to partner with companies, but we can invest in a company at any stage, at seed, at Series A, at Series B, at Series C, etc. And in India, we've been very fortunate. We have several hundred portfolio companies that we've invested in. And Sequoia Capital India has, I think we have now 16 unicorns, so about half the unicorns in the country. We are fortunate to be investors in companies like Freshworks, Oyo, Zomato, Ola, Byju's, Pine Labs, and a whole bunch of companies like that, as well as in Southeast Asia, companies like Gojek, like Tokopedia. Gojak's a decacorn. Tokopedia is getting close to be a decacorn. Traveloka, which is the largest travel company in Southeast Asia, as well as several other companies. So large number of investments, but we are a purely tech investor, and we like to go invest very, very early. But at the same time, we can invest in growth stage companies.
That's great. So what are the so how should an early stage startup founder approach you? So one way is that you are saying that so there is a cohort system where person can apply. Is there any other way also through which a person can apply? And can you also tell a little bit about the process of vetting process of search?
Yeah, I mean, is this chat accessible to everyone, Saurabh, or is it only to us?
No, it is accessible. The chat is not accessible to everyone. The questions are only visible to you, but whatever we are recording is telecasted.
No, I'm saying I'll just give you because founders might be interested. Basically, with Surge, which is the program,
You can
our,
share.
our, our seed stage program. Yeah, I'll just put it on the chat, and then you can figure out a way to get it to everybody. I don't know whether everybody can see that. Maybe we should ask the attendees. Can you guys say that? I just posted surgeahead.com to all panelists and attendees. Okay, awesome. So basically, look, Surge is actually very straightforward. We have an online application. You apply online. Obviously, it's quite a thorough application that we look for because we're looking for very serious founders who want to build real companies. So one, you can apply online, and it's especially for Surge, but also to Sequoia. You can write to us, or another good way to sort of reach Sequoia, especially if you're further along in your company journey, you're trying to raise Series A, B, or C, you can get referred, right? A good way to actually approach any venture capital firm, not just Sequoia, is to be referred by somebody that they know, either let's say a portfolio founder that Sequoia is invested in, or another co-investor, so you can get referred. But we are very good, actually. Like we respond to LinkedIn messages, we respond to Twitter DMs. Pretty much, right? We are. So I would say, but especially if you're trying to raise. So Surge, by the way, is if you're trying to raise a few $1 million, right, up to $2 million, then you should apply to Surge, and we'll take a look at it and we'll get back to you. So we made it very easy, right? All you have to do is apply online.
And what are the sectors which you prefer these days? Any sector preference?
So Saurabh, we invest in tech and tech-enabled companies, right? So a very, very broad range of tech and tech-enabled. So the most important thing is, we have to see there has to be real tech involved in the business. And so I would say it's a very broad range. To think of consumer internet, Edtech, digital health, fintech, gaming, software as a service, and that can be enterprise SaaS, it can be SMB SaaS. There's a whole new category of companies in India called SME tech. So think about companies like Katabook, B2B commerce, right? That's a space we're quite excited about. E-commerce, consumer commerce, direct-to-consumer brands, ag tech. So it's a whole spectrum, right? Food tech, especially food brands. So we actually, as a firm, as an institution, we actually invest in a large number of tech and tech-enabled sectors. However, like for instance, we don't do biotech in India because within our team we don't have the expertise yet to invest in Indian biotech startups. We don't do medical devices, but we do digital health, right? So, but we won't do hardcore life sciences per se, because at some point I'm sure we'll start doing it. But currently, that's an area we don't have as much expertise in. If you're building, for instance, a solar energy business, where you're going to generate a lot of solar, and that's not something we'll invest in, right? Because it's not a tech company, a digital sort of a digital tech startup. But if it's sort of a digital tech startup, including we actually are quite active investors in direct to consumer brands, right? Think about whether it's personal care brands, beauty brands. We have a company in Surge called Skillmatics, which is an educational toy company, actually a physical product toy company, India to the US. Company based out of Bombay. But there again, right? It's a product, but you're actually selling it online. They sell it on their own website as well as on Amazon in the US. So as long as it has a digital component to it, it's something that we will seriously consider.
So my next question is, what's your take on Edtech and e-health? So many of the people are saying that in COVID, Edtech and e-health are the only sectors which are benefiting. So any take on that?
Yeah, so I mean, look, certainly there's been significant tailwind in edtech, right? So if you go back to pre-COVID, India had about 40 million online user students who are actually consuming online education products, right? The number of paying users is much, much lower, obviously, but that number is over 100 billion. So today, actually, if in India, we have 500 million internet users, right? About 100, over 100 million of them, basically, think of it as 1/3 of India's student population, as well as, obviously some of them are sort of professionals and in universities and things like that, actually consume online education products, Saurabh. So you've seen a 2.5x growth in basically free users of online education products, and within paid, I mean, we've seen more than a 3x growth in the paid users, right? So, Sequoia, we are very fortunate to be investors and partners at companies like Byju's, like Unacademy, like Doubtnut, like Class Plus, eruditis, and so on. Edtech, I think, is a very, very interesting space. I think if you're starting a new edtech company, you just want to make sure that you're focusing on a segment that doesn't have too many competitors, right? And you're thinking very, very deeply about how is your product going to be very different. So let's say you're doing something like K through 12 test prep, right? How's your product different to the existing very well capitalized large companies there are, right? If you're going to do, let's say, coding for kids, right? White Hat Junior has been extraordinary success, fastest 0 to 100 million revenue company in India's history, which is quite remarkable, actually. A lot of people don't think of it, right? It's the fastest 0 to $100 million revenue startup in India that we've had. Real revenue, right? I'm not talking about GMV. A lot of startups talk about GMV and TPV and all of that. I mean, that's not revenue, right? Revenue is revenue. So but if you're going to be, let's say, a computer science or coding for kids sort of platform, you've got to really ask yourself, like, how is this different? What tech segments are you targeting, etc. But we do believe that if you there are 17, actually now there are 18 edtech unicorns in the world, Saurabh. The most valuable edtech unicorn in the world is obviously Byju's, now valued at over $10 billion. And then the Unacademy, as you know, became a unicorn, I think about 2 weeks ago. So that's the second edtech unicorn. But easily over the next 5 years, we'll have at least a dozen Indian edtech unicorns, because there's so much. It's not just COVID, right? I mean, basically Indian consumers, even though, every Indian parent will actually absolutely spend to educate their children, right? So if you actually look at education spend by especially private sector education spend in India, it's actually quite high, especially for test prep. Now moving to digital health, I think this is a sector, in a country of 1.4 billion people, close to 1.4 billion people. So far, we haven't had a single edtech unicorn, right? India now has 34 unicorns. That number was, by the way, 0. India had 0 unicorns in 2010. A lot of people forget this, right? A decade ago, we had 0 unicorns. Today, we have 34 unicorns. What's very interesting, Saurabh, is that 7 of the 34 unicorns India has became those companies became unicorns in 2020. In fact, since COVID lockdowns, we've had 3 new unicorns in India, right? But despite all of this, we don't have a single health tech unicorn. It's quite remarkable, right? Country of 1.4 billion people, so much innovation, so many startups. But actually now we believe that COVID actually has had a massive impact on digital health and health more broadly, right? So for instance, as I'm sure you, those of you on the call that are building digital health companies know this, right? So telemedicine was not, quote unquote, allowed in India, right? But as soon as sort of COVID lockdowns approached us, I mean, that became legal. So today you can build a pretty large telemedicine company. We had zero, we had very, 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 very small numbers of online consultations happening. Today, that number is probably, I don't know, maybe 30, 40x the number that it used to be 5-6 months ago, right? But it's still very, very early. So, if you look at digital health, there's telemedicine, sort of vertical health or disease management companies. At Sequoia, we invested in a company called Twin, which is going after sort of a very, very interesting solution to help sort of diabetic patients control their diabetes, and over time actually get quite better. So in every disease, you can see sort of very, very interesting, innovative solutions that will come up to go after those. Go after the diseases. You have fitness, right? We have actually in our current cohort of Surge, we have a company called Fitter, which is an extraordinary company, right? This company is it's got a staggering amount of revenue. It's growing 30% month on month. It's profitable. But what's very, very interesting, Saurabh, it's got 0 CAC. They don't spend a paisa. They have never in their history spent a single paisa on marketing, right? So that's the kind of growth that we're seeing in fitness, and then mental wellness. I know, right? A whole bunch of new companies that are coming up in mental wellness. And then also you have like applying AI to healthcare, right? We think there's a massive opportunity to apply machine learning to healthcare data, because we have a lot of healthcare data. So can you actually build and train models here in India, and then take those models and start building companies elsewhere? So when it comes to healthcare analytics, for instance, Innovaccer, right, which is an India-US company, it's a cross-border SaaS company, is doing extraordinarily well. I'm a personal angel investor in Innovaccer, and this is going to be a gigantic company, right? Over the next couple of years, you'll hear more and more about this. This is the India to the US SaaS company. So whether it's sort of telemedicine, whether it's online fitness, whether it's mental wellness, whether it's AI in health, whether it's disease management by disease, there is massive opportunity across the board. So I think you hit on probably two of the sectors that have the most tailwind, edutech and digital health, as a result of COVID. You're on mute again, Saurabh.
So my next question is, do you believe in an elevator pitch, and what are the key points you look in an elevator pitch?
Yeah, I mean, elevator pitch is important because, being able to, let's say in 2 or 3 minutes, describe what it is that you're doing with your business is very, very important. Now, obviously, if you're, let's say, if you're pitching to a Sequoia, you're pitching to a search, first step is, you apply online, you have to make sure that you write that very carefully and so on and so forth, attach a deck that's a well-written deck. But, when you pitch to us, you'll get 30 minutes, sometimes you'll get 45 minutes, depending on whether it's the first time or the second time we're meeting you, right? So, but it is important as an entrepreneur, as a startup, to have an elevator pitch, because a lot of times, you only have 2 or 3 minutes to communicate your story, right? And I think in the elevator pitch, what you really want to try to capture is, what is the, what's the mission that you have, what is the problem you're trying to solve. Third is, what is the solution and how are you solving it? And fourth, to the extent you have traction, you should try to summarize the traction, at a very, very quick level, right? So for instance, you can say, we have 1 million users, we have a, 3-monthly retention of 35%.
Rajan, can you repeat again?
Sorry, say that again.
Can you repeat again the 4 points, because there was a technical issue in between.
Yeah, no, I think it might have been on your side. I don't think, So basically, look, I mean, I think it's very important to essentially say, right, what's the mission? What are you trying to do? What's the big problem you're trying to solve? How are you going to solve the problem that's different to what's out there in the marketplace? And to the extent you've launched, you should sort of say, give very top line metrics, right? If it's a consumer company, how many users, what's your retention, how's the growth month on month, things like that. And then just sort of, if you have enough time, team is very, very important, especially at very early stages. So sort of say, this is sort of our background. So 2-3 minutes, you should be able to say, and I'd encourage all founders, especially actually across stages, right? Whether you're a very early stage founder, or even if you're a more established founder, being able to say what is the, tell your story. Basically, sort of elevator pitches, tell your story in 2 minutes. That's sort of what it is.
Okay. And what are the key points you look in a pitch deck? Can you give some idea of the points? Yeah,
I mean, look, I think those of you that are trying to create pitch decks, I would strongly recommend that you find, a Surge partnered with Startup India, the government Startup India initiative. We did a 4-part webinar series on raising your seed round. And the second part of it, we ran it over 4 weekends on a Saturday from 4 to 5:30, but all that content is now online. I'd strongly recommend that you look through it if you're raising funding, especially if you're raising a seed round, because we actually had a whole 1.5 hours on your pitch deck and what should be in the pitch deck, and we shared examples and things like that. But again, in your pitch deck, you should start with what's the mission of the company, what's the problem you're trying to solve, right? How are you solving it? That's different. You should talk about, to the extent, you should talk about why now. Why is it that now is the time to solve this problem? We assume it's a problem that hasn't been solved as well before. If you've launched, you should share some metrics. I think one of the most important metrics you should think about is user love. How do you demonstrate that your customers, be they consumers or businesses, depending on who's using your product, really love your product? Single most important thing if you've launched, how can you show, is there user love for your product or not? And that can be, if you're building a consumer internet product, that could be retention, show some cohorts to actually show that how will a set of users that you acquired in a month, how many of them have returned and are using your product, by week or by month, depending on the frequency of the product. And then you should talk about the team. Obviously, why is this the team? go after this problem. And finally, you should talk about your growth plans, right? Where will you be 12 months from now, and where do you think you'll be 5 or 6 years from now, right? So, and then you can wrap up with how much funding are you looking to raise. One thing you shouldn't do if you're doing a pitch is don't give a valuation, right? A lot of startups actually sort of say, hey, look, I'm trying to raise $2 million valuation, and $2 million or whatever, 10 crores, and we're looking for a valuation of Y. You should always let the investor decide, how to value the company, right? Because you don't want to give away your cards. So it's pretty standard practice for founders to sort of say, hey, look, I'm trying to raise 10 crores or 20 crores or whatever the number is, or it could be 5 crores or 3 crores. And when they ask you what's the valuation, you should say, look, I mean, we just want to partner with the best investors, and we are open to the valuation, and have them come back, have the investors, if they're interested in your business, come back and tell you how they want to value the company and what valuation they're willing to offer you.
So I will like to ask questions from the people after 2-3 questions. So please start writing the questions in Q&A form. We have a few questions. Please write more. So the next question is, what are the legal agreements required generally by investors and by Sequoia Surge or Sequoia in general?
Yeah, I mean, look, the legal agreements, basically there are two agreements, not just with Sequoia, but with any venture capital firm, right? There's something called a term sheet. It's usually a couple of pages. It's pretty simple. The Surge term sheet is only 2 pages. It basically says what are the terms, right? How much is being invested? How much of what is the valuation? And then it sort of, outlines of, probably like 6 or 7 important rights, right? And then it talks about confidentiality and so on. So, and then that's sort of a term sheet. It's pretty standard. And then you have a shareholder agreement, which tends to be a little longer, but that actually outlines, a lot of the rights that shareholders have in your company. But those are the two sort of legal documents, if you will, if you're doing a financing round, that you'll always, have, right? Regardless of which stage of investment or which who the investors is. Those are the 2 documents that you will have.
And can you also explain the various rounds of funding? Because we all know there is Series A, B, C, D. But I've met a lot of early stage founders, and generally they are confused about the size of the rounds, as well as everybody knows about the sequence, but they don't know about the size. And sometimes somebody is taking seed which is bigger than the Series A of somebody else. So those kind of issues are also there.
Yeah, I mean, look, I think, Saurabh, the first thing about fundraising is, founders should keep in mind that fundraising is not the objective, right? The objective is to build an enduring company, right? So, I'm a huge admirer of Zerodha, right? So I don't know how many of you use Zerodha, but, Nitin and his team at Zerodha actually built Zerodha into the #1 brokerage in India, fully bootstrapped, right? Didn't raise a single paisa of external capital, right? Same thing with, let's say, Sridhar Vembu and Zoho, right? And they actually now quite a number of, in fact, about 2 weeks ago, I was talking to a SaaS company in Pune that has, I think now 30 or 40 crores of revenue. It's growing very, very fast, 100% year on year. Haven't raised any external capital. They're profitable and so on and so forth. So keep in mind that if you're a founder building your business, the best source of funding is from your customer. If you can get your customers to pay for your product and use that revenue to actually fund and build your company, that is the best source of funding. Now, that being said, there are a lot of businesses where you just can't do that, right? If you're building, let's say, a distribution first business where you're going to build a large user base and then monetize over a period of time, you can't do that. So you need to raise funding. And if you're trying to raise funding, then this is why, by the way, you should, those of you that are trying to raise funding, please do watch this 4-part series. I'll try to get the link and I'll put it on the chat. Please try to watch all 4 of those, because I think you'll see that it's a very good primer on what to expect, what not to expect, what you should say, what you shouldn't say, etc. So what we say in that is, look, start not with saying, do I want to do a seed or a Series A or a Series B or Series A? Also, don't start with, I want to raise $2 million, right? Start by saying, how much do you need to get to the next important milestone, right? That's the way to do it. And then work backwards from there. You might figure out that, you only need 1 crore. You might figure out you need 15 crores. And then that becomes how much you need to raise. But so that's sort of how we like to tell our founders or advise our founders to think about their fundraising. Now, that being said, look, you have an angel round that can be 1, 2, 3, 4, 5 crores. You have a seed round. It could be 5 crores to maybe call it 15 crores, maybe 17, 20 crores, so 5 to 30, you could say, right? So for instance, Surge, where we invest at the seed stage, but we tend to do larger seed investments, right? $1 to $2 million per company is what we would invest at Surge. So we're a seed fund, the seed program, right? And then you can think about Series A as $4-5 million at the low end of the range, up through about $10-12 million could be a Series A. Sometimes you can raise a $15 million Series A. And then after that, it becomes a Series B, right? Series B would start at, call it $12-15 million and could go up to 20-25 million. And then every subsequent round is larger, right? So that's sort of how to think about it, right? You can think about, so what a lot of startups will do is they raise 20 or 30 lakhs from friends and family. Then they might go out and raise, let's say, a crore or two from angel investors. Then either they will use that to get to a Series A and raise 5 million, or then they'll raise, let's say, a $2 million seed round. And then, if they raise a $2 million seed round, normally they will raise a $6, $7, $8 million Series A. So that's the flow of how the fundraising works. But I would strongly encourage all founders that the best form of funding is your customers' money. So if you can find a way to get your customers to pay so that you can build your company, like let's say a Zerodha did, or a Zoho did, or now actually even you have consumer brands that are being built, because you can build digital first brands, direct to consumer brands very, very capital efficiently now in India. So if there's a way for you to do that, that's a path you should really explore, because then you're going to build your company the way you want to build it.
My next question is, what is the general equity dilution at the end of each round? And generally, so I was talking to some other investor 1 month ago in the series, and he was telling that if it is like if you have diluted in the first round more than 30%, they are not willing to invest. So can you give such kind of figures where?
I mean, look, there's no rough rule of thumb, but normally if you're trying to raise, let's say, a meaningful round, right? Let's say between 5-10 crores or above that, investors will look for a minimum ownership stake of 10%, maybe up to about 20-25%, right? So simple rule of thumb is until you get to very large fundraisers. Right now you'll hear about a company that raised 50 million at a $150 million at a $10 billion valuation, right? So obviously they're diluting a very, very small percentage of their stake. But I would say in the early days, right, seed, a $1-2 million seed round, you probably dilute between 10 and 25%. And then when you raise, let's say, $10 million Series A, you'll probably dilute, between 15 and 25%. Then you raise, let's say, a $50 million Series B, which is a very, very large Series B, or maybe it's a Series A, you might raise, you might dilute 20%. So that's sort of how it is. But then once you get beyond $400-500 million, then, the math starts changing, right? Saurabh, because let's say your $850 million pre-money, you can raise $150 million, you're diluting about 15%. So the higher the valuation goes, depending on how much capital you're raising, the lower the dilution is. But in the early days, you should assume that 10 to 25% is what you'll have to dilute for a meaningful round, depending on the stage, right? So, and that's why you have to be very, very careful about how much you're going to raise, because every fundraise that you do, you are going to dilute, right? So that's why we actually really, really encourage founders to think about how much do you really need to get to your next milestone, as opposed to, hey, look, somebody else raised 5 million, therefore let me go and raise 5 million, because your business may not need 5 million, number one. And number two, your business may not be at a stage where you will be able to raise 5 million. So you ask yourself, how much do you really need to raise to get to the next milestone? You also sort of try to see, at what stage is this company at? And therefore, how much can it realistically raise?
So a small thing which I would like to ask would be, has COVID impacted early stage funding?
Yeah, no, absolutely. Look, I would say the impact was very severe in the month of April and May, Saurabh, right? So, India locked down around the 20th or 21st of March. Everybody was shocked for the first couple of weeks. Deal flow was very slow in April because, none of us as investors, we didn't know how long it was going to take to recover. Obviously we had to get used to doing investments on Zoom, right? Because we couldn't meet human beings anymore. And also there was a lot of uncertainty about, when will different sectors come back? How will consumers react? How will businesses react, and so forth? So I would say May was also a bit slow, but then things really started picking up in June. But I would say now, here we are sitting in the middle of September, Saurabh. If you look at seed, which is where I personally spend a lot of my time, we are busier than we've ever been, right? Last weekend, Friday, Saturday, and Sunday, we had an investment committee meeting, effectively final pitch meeting on each of those days, right? So it's gotten that busy. And I'm amazed to see how quickly seed stage activity has come back. So we're extremely busy at seed stage, and I'd say even our Series A team venture team, right, is very, very busy. So I've been very pleasantly surprised to see how quickly investment activity, new startup activity has actually come back, Saurabh.
And a question which I would like to ask would be that I've known that you are a very big angel investor also in personal capacity. So how can somebody approach you personally for angel investment?
Yeah, so now Saurabh, I invest through Surge, right? Because I'm part of Sequoia. I co-lead Surge, so it would not be appropriate for me to invest my own capital and then invest through Surge. So you're right. I was very, very active as an angel investor, but now I focus my time on Surge. So now you have to, you're talking to Rajan, you're talking to Surge,
Okay.
and the rest of the Surge team. But effectively, when I'm talking to a founder, especially when it's got to an investment, I'm always talking to that founder from a Surge perspective.
So last question from my side, and then we will open up for people. So you had a very great corporate career. You were heading Microsoft in India, then you were heading Google in India. So what advice will you give to somebody who wants to emulate your successful career?
Yeah. So first of all, I took a very different path, right? I'm assuming that most of the folks on this Zoom, as well as watching on Facebook live, are entrepreneurs and founders, right? So all of you have picked a path that's very different to my path, right? So I basically, went to MIT, graduated from Stanford, then went to McKinsey. I was at McKinsey for a long time. Was a partner in the McKinsey Chicago office. Then I went to Dell. I worked for Michael Dell. Actually, I came to India 15 years ago to build the Dell India business after working in the US for a while. And then I went to Microsoft, then I went to Google, and now I'm at Sequoia, right? So my path is very, very different, I think, to the journeys that all of you, assuming that most of you on this call are actually founders or want to be founders, founders are going to be. But I think my only counsel is, do something if you're really, really passionate and in fact obsessed with the problem, right? I always sort of counsel people who are thinking about starting up to say, look, only start up if you found a problem that you're going to be obsessed about solving, right? You can't sleep at night, you keep thinking about this problem. And also do it if you think you can commit the next 10 to 15 years to building this company, right? A lot of people do it because entrepreneurship is cool. They think that not having a boss is cool. Being an entrepreneur is by far the hardest job in the world, period, right? So you don't want to take this lightly, right? You want to do it because you really, really, really want to build something and you're really obsessed about solving a problem and you think this is going to be your life's work. I mean, this is very, very important, right? When you embark on being an entrepreneur and solving a problem, do it because you feel so strongly about this problem that you want this to be your life's work. And I think not enough founders actually give it that kind of thought. And as a result, what happens is, 2 or 3 years later, they just lose steam, right? Because they don't realize how hard it is and how long it's going to do. I mean, Saurabh, if you look at Vijay Shekhar Sharma, who you know well at Paytm, right? I mean, Vijay started his company in 1990. First company was 1997. It's been 23 years, right? And in fact, 197, which is the parent company of Paytm, I think was founded in 2000 or 2001. He was telling me, right? So this is the 20th year of 197, right? And everybody thinks about, wow, Vijay, I mean, he's an extraordinary founder. He's been building for 20 years, right? And I'm a huge fan of Vijay. And it's amazing how many times Vijay has pivoted his company, right? Because that's what it takes to build a large company. It takes a long time. You have to go through many, many different changes, and it has to be your life's work. So ask yourself, is this a problem where you feel so passionate about, where you're obsessing so much about the problem that you can imagine spending the next 10 to 15 years building this company? And do it if you feel that way. If you don't, find something else. Because doing it because you're going to be not reporting to somebody. A lot of people in corporates come and ask me, should I become an entrepreneur because I don't want to report to anyone. I said that's the worst reason you should become an entrepreneur, right? Because you're going to be working like 18 hours a day, 7 days a week for the next decade, right? Because that's what it takes to be a successful entrepreneur.
Okay. So I will now open up for question answers from public. But just before that, I would like to share about the free payment gateway which Paytm Built for India is giving, and also about our mini apps program. So just 1 minute. So Paytm Built for India is giving free payment gateway to early stage startups. So broadly speaking, we give 1 lakh rupees worth of transaction value free of cost for first 12 months. So for that, the process is very simple. You can just write an email to me with the details of the startup. I will forward to my team, and they will come back to you and offer this plan. So I'm sharing my email address saurabh3.jain@paytm.com. Saurabh3.jain@paytm.com. I have shared in chat window. So you can write to me and you can get this free startup plan. The other thing which I would like to share would be Paytm mini apps program. So a lot of people reach out to me that we want to do some tie up with Paytm. So we have formalized a program called Paytm mini program, where you can put a icon on Paytm app, and your icon would come, and we give you some APIs, and you can integrate your mobile website or a progressive web app. You get access to the 14 crore users we have, and see, you will be able to rub shoulders with all these big brands which are there, which are live on Paytm mini apps or in the process of getting live on Paytm mini apps. So with that, I would like to switch back to the Q&A. So first question which I am taking is from Sanyam Bhuthani. How does one know that an idea is a good idea?
You have to launch it and see whether you can find some customers who love it. Hey, Saurabh, I'm going to put on the chat this YouTube channel that you can go to find the 4-part webinar series on how to raise your seed round. So for those of the founders on the call that are trying to raise a seed round, please do go and spend some time on it. It's obviously not a 10-minute watch. It's not a TikTok video. But if you're going to raise your seed round, please do go spend the time and watch all 4 parts of this video series. It'll just make your fundraising go much smoother. Yeah.
Coming back to the question, have you answered that?
Yeah.
Do you want to add anything?
No.
Okay. So a question which I would like to now take is, how deep is the involvement of mentors with the cohort during search program?
Yeah, very deep, right? So the way to think about mentors is we have the Sequoia team and the search team, right? So we have obviously our search team, which actually has investors, and then it has operating expertise like marketing, tech, finance, etc. Then we have the Sequoia team, which also has like let's say an entire team that posts portfolio finance. We have and so on and so forth. So that those teams are actually very engaged. So for instance, I have office hours. All our team members have office hours. We spend 4, 5, 6 hours every week, right? Where startups come and meet us one-on-one. They talk to us about issues that they're having, areas where they need guidance. So, and they do that with a lot of the Sequoia and Search team members. And then we have actually Sequoia and Search portfolio founders who spend time with our existing portfolio, right? Depending on the needs that, et cetera, that they have. And then we have an external set of mentors as well, right? So, designers, product leaders, engineering leaders, and so on and so forth. And then finally, we have unicorn founders. In fact, Vijay was gracious enough to come and speak to our last search cohort. He spent 2 hours with us. In fact, actually did a masterclass on building, amazing products. It was extraordinary. Probably one of the best sessions we had in all of search was Vijay Shekhar Sharma's session on building world-class products, right? So we have a combination of folks that come, right? And a lot of them actually spend, fair bit of time with our founders.
So the next question is, so somebody has asked a question, I'm summarizing it. So basically, how do you know that when you are investing in search, how do you look out for product market fit of a startup?
Yeah, so I think a couple of things to note, right? Firstly, we do invest in pre-launch companies, Saurabh. So as I said, in our second cohort of Surge, right, we had 20 companies. 6 of those companies had not launched yet when we actually got them into Surge, right? And in a pre-launch company, just so that you all know, so most of the companies have launched, right? So if you ask me, would your odds of success of getting into Surge be higher after you launch? The answer is obvious, yes, it is, right? But that being said, look, we also do partner with companies and invest in companies in Surge before they've launched. Before launch, look, we look for basically the team, right? We ask this question of, what is this team's unique right to win in this market, right? So you'll hear this concept called founder market fit or founder product fit. Again, another plug for this, a 4-part webinar series. And the reason I keep bringing it up is because people have all these questions. If they just spend a couple of hours watching these videos, they'll be just so much more educated on this. So we look at that, right? And sort of say, what is it in your background that you've done that gives you either unique insights or unique capabilities to be able to win in this market. And then we also look for things like resilience and will you be able to attract teams and build teams and so on and so forth. So that's one. Second, we look at the market, Saurabh, to say, is the market large enough to build a big business, right? At the end of the day, if the market is too small, then it's very difficult to see how this becomes a multi-billion-dollar company, not immediately, but 7, 8, 9, 10 years from now. So those are the two things. Now, if the company has launched, the most important thing we look for is user love, right? So I would say very few of the companies that get into search have achieved product market fit. Right? Because that's a pretty high bar when you say you've achieved product market fit. Simple way to think about it is if you already have product market fit, then you're most likely ready to raise a Series A, right? But what we see is we see early signs of product market fit, and the best indicator for early signs of product market fit is user love, right? User love meaning if you're a B2C business product, do the consumers love your product, right? If you're a B2B business, do your business customers really love your product? So then the question is, how do you measure user love? Well, if you're an app, best way to measure user love is time spent, engagement, and retention, right? So if you're, for those founders on the call who are actually building an app-centric business, right? Let's say a consumer business, it could be Edtech, could be digital health, could be could be ag tech for farmers, whatever it is, right? Look at basically retention, right? Look at if it's a weekly product, look at weekly retention. It's always a good idea to look at daily retention, right? What's your day one retention? If your day one retention is 98%, that's a very interesting statistic. If your day one retention is 10%, you probably don't have much user love, right? Look at month three retention, right? So for instance, there are a lot of social apps in India today. I don't know how many of you know this, but TikTok, before the TikTok ban, TikTok in India had month three retention of close to 40%. Okay, 40%, close to 40% monthly retention in India, where retention rates have been historically lower. Right now, if you compare that to a lot of the other sort of, let's say, TikTok lookalike apps that are being launched in India, the retention is much, much lower. So again, right, you're looking at retention to see, and retention, Saurabh, as you know, is a simple metric, right? It just says how many of the users are continuing to use your product, right? At the end of the day, if you don't continue to use the product, you don't love the product, right? Similarly, on the B2B side, right? So let's say you're building an SMB SaaS company, we look at churn, right? So if you've got 6% monthly churn, which means 72% of your revenue at the end of this year will be gone, right? 6% monthly churn is 72%, right, per year. That's not a great business, right? It means that, these small businesses that start using your software are just not going to use it anymore, right? And especially if it's a paid product, it's different if it's a free product, right? If you're a large enterprise, if you're building SaaS products for large enterprises, right? You're looking for net revenue retention, and that better be positive, right? And, and ideally, if you can get to 120, 110, 120% net revenue retention, that's good. So long answer to your question, but user love. Right? So if you're a startup founder on this call, if you've already launched, you should ask this question: do we have user love or not? And then the next question obviously is, how do we measure user love? So you should give that a lot of thought. You should talk to a lot of product managers in your space, others who build companies in your space, and say, how would we measure user love, right? I'm surprised to see how very few startups measure NPS, Saurabh, right? Net Promoter Score. Even if you have 10,000 users, you can measure NPS. Figure out what your NPS is. If your NPS is only 10, 15%, you don't have user love. We will not invest, right? Whereas if your NPS is 75%, you have user love. We are going to be very, very interested.
I think these are some very important words, and like now I think it would be very clear for the early stage startup founders on what to focus on. So somebody is asking about healthcare. I think you have already shared about that.
What's the question, Saurabh?
So somebody was asking about healthcare, but I think you have already.
Yeah, we've talked about healthcare. Yeah.
So somebody is asking about your take on sustainability, and sustainability. This person is referring to UN Sustainable Development Goals. So what is your take on that?
Well, it's absolutely critical that India achieves the UN sustainability goals as a nation, right? Otherwise, we are not going to be able to have the kind of country that we'd love to, that we need to have, right? Whether it's education, whether it's healthcare, whether it's environment. And I do think companies that are focused in core sectors, right? If you look at India today, what's very interesting, Saurabh, is what are the most exciting sectors of the Indian startup ecosystem today as we stand here in September of 2020, right? Education, core sector, healthcare, core sector, financial services, right? Not just payments, but lending, right? Insurance, wealth management, core sector, agriculture, core sector. 4, right? So the top 4 sectors for startup investments today are basically core sectors for India, right? And these are sectors where, as a nation, we need to achieve our sustainability goals, right? And obviously, startups can play a major role in achieving those goals, right? Because the reality is, as you know, Saurabh and everybody on the call, without technology, there is no way that India is going to achieve India's promise, right? We need to have technology deployed at very, very large scales to be able to achieve the dreams and the hopes that we have for India as a nation.
So 2 people are asking a question that, do you prefer to invest in solopreneurs, single founder?
Yeah, absolutely. Look, we in fact, in our current cohort, we have like Nelly, who's based in Singapore, who's the founder of Tiger Hall. It's a very, very interesting company in the learning and development space, right? Where they bring a new, fresh approach to learning and development. Nelly is actually a single founder. So we had a company called Column that has a single founder. So we've had several examples of single founders in Surge. Vijay Shekhar Sharma is a single founder.
So somebody is asking about how to validate ideas. So can you specifically tell about?
Great question. Look, basically how to validate an idea is try to launch it quickly. If not the actual product, try to actually go out and talk to a large number of customers. So I would say if it's, let's say, a purely digital product, right? Try to build it quickly and launch it and see what happens. But before you do that, go and talk to customers, right? So for those of you that are entrepreneurs that are actually thinking about building something, right? Please, if you're not a trained product manager, which I assume most of you aren't, please go and spend some time learning about product management, especially about what product managers do best, which is understand user needs, right? So what I find the best entrepreneurs doing is long before they launch a new product, they will actually go and do a large number of customer interviews where they're really trying to understand, is there a need for this kind of product, right? So you do a large number of interviews, you figure out what the needs are. Then you actually come up with some mocks. You can show some mocks, right? Then, for instance, it's amazing today, right? You can just launch a landing page and see whether people are interested, right? Let's say you come up with a really interesting idea saying, I think this really, put it out on Facebook and see if anybody is interested. Very few founders do this. Why don't you put it out on Facebook and see whether anybody is interested? If thousands of people are really interested, they're like, wow, okay, there is a need for this, right? And then what you should try to do is do a very fast experiment where you can get an alpha, very, very early product and put it out there and see what happens and then keep iterating. What is a really bad idea is not to talk to any customers, take 2 years to build something, then launch it and find out whether it works, because that strategy is generally not a good idea, right? Always start by doing a lot of user research, right? And that's what, so by the way, the pre-launch companies that we get into Surge, one of the things we're really trying to understand is how deep is this founding team into the problem that they've solved, right? Do they really have unique insights about the problems that these consumers have?
Somebody is asking, what is the right point where somebody should start looking for funding?
Yeah, as I said, right, look, there's no right point. It all depends on what do you need to get to your next set of milestones, right? So if you're a bootstrap business, if you can generate revenue, if you can get customers to pay for the expenses you need to incur to get to your next milestones, you should do that. However, if you actually need to raise capital to get to your next milestone, then you need to raise capital, right? But keep in mind that whether it's 2 crores or 10 crores or 5,000 crores, because in India, we have had $1 billion fundraisers, including at Paytm, right? It's going to take several months. Nothing will happen in 2-3 weeks. So don't wait till you're completely out of funding to say you want to raise your funding round, right? So you should make sure. In fact, when India shut down, locked down for COVID, we had a large at Sequoia as well as the entire ecosystem. We came together. We had a large number of webinars, right, to give counsel to our founders, both within Sequoia, but also externally. And one of the things we talked about is it's important for companies, if possible, to have 2 years of cash runway, right? I mean, that's when you feel secure that, especially if you're not a profitable company, right? If you're a profitable company, you're not burning, so you're okay. But if you're a company that's not profitable yet, it's good to see if you can get to a point where you have 2 years of cash runway.
And what's your take on serial entrepreneurs?
I think serial entrepreneurs are awesome. We've had quite a number of serial entrepreneurs in our Surge cohorts. I think the key thing is By the way, we have several serial entrepreneurs in Surge who actually his first or even second startup didn't work, but they've started up before, right? And they learn a lot, from starting up. So look, it's like anything else, right? Second time you do it, you're going to be better. We just want to make sure that you still have the motivation and the energy left to keep building for a decade or 15 years.
And what's your take on tech co-founder? So there is always a talk about having a tech co-founder in the team.
Yeah, I mean, look, if you're building a tech company and you don't have a tech co-founder, right? If you're not technical and you don't have a tech co-founder, then you're going to have to build a tech company by outsourcing tech. That is not something that's particularly interesting. It's sort of saying, right, look, I'm going to go build a hospital, okay? Let's say Rajan is going to go build a hospital, but I don't know anything about medicine. If I don't have a partner who's a doctor and knows something about medicine, you can imagine the kind of hospital we're going to go build, right? We are not going to build a good hospital. We probably need a doc, and then we need somebody who's run hospitals before. Because I may be, a business guy, right? I could have run Google and been at Microsoft and know tech and know venture capital investing. But the reality is I know absolutely nothing about hospitals.
So in the current Corona environment, we are seeing that every day, like one doctor says that this is happening with Corona, the other person says that is wrong. So I believe that like if you don't know anything about medicine, then obviously you will be just like randomly telling things to your team. So next question is that any book suggestions for new founders?
Yeah, I think lots of books, right? Look, in general, I think if you like reading books, you should read books. But if you're a startup founder, I would, go on YouTube, watch as many videos as you can, depending on the stage of business you're in. Just learn, just learn. And then lots of books, right? Depending on what you're excited about. I mean, 0 to 1. I mean, every week there's a new book. So I'm looking at my book column here. There's a book called Range, right? Which is about generalists versus specialists. Let me see here. I have a master growth hacking book. What works, what doesn't work. I mean, yeah, so many books here. But I would say, watch a lot of videos. Watch a lot of videos because, then I think you learn a lot from, it's very interesting when the early days of blockchain, every weekend I would spend several hours watching YouTube videos on blockchain because I wanted to learn about blockchain. My dear friend Jaspreet, he's a blockchain expert. So I talked to him, but that's sort of how I learned about blockchain, right? So if you're trying to build a startup, just spend a lot of time learning about what it takes to build a startup. That's why I'm saying, like, if you're going to fund, if you're in fundraising now, or you're thinking, you need to fundraise in the next 3 to 6 months, at a minimum you should do is watch this, especially if it's a seed round, right? If it's a Series B, C round, this video series is not going to be helpful, but this webinar series that Surge did with Startup India that I put on the chat is very useful. Invest the time in learning because learning will shorten your execution cycles and will make sure that you don't make mistakes that others have made before.
So we will be doing just 2 questions now.
I think we're almost out of time.
Yes, if you have 5 minutes, I can ask 2-3 more questions. So we are getting a lot of questions.
No, let's wrap up with one question. I have a back-to-back today.
Okay. So I think just 1 minute. So I think another question which many people generally have this issue is that what is the importance of being from a Ivy college for getting investment? Many people have this apprehension, like if you meet startup founders on ground, they have this apprehension that if I am not from IIM, IIT or maybe from foreign, I would not get investment in India. So is it true, or obviously the coming from good institutes does help, but is it like a glass wall?
It is absolutely not a necessary condition, right? So if you look at our current Surge cohort, in fact, if you go to the surgeahead.com website, go to the third, third cohort, right? Look at the founders. Yes, we do have founders who went to the IITs and so on and so forth, but we have a large number of founders who didn't go to the Ivy League or the tier 1 engineering schools. But so look, at the end of the day, right? What is it about? It's about an obsessive desire to solve a problem. And then it's about obsessing and building fast and making sure you built a product that users love. That is what's important. Doesn't matter where you went to school, right? What matters is, are you focusing on a problem that's large? Have you built a product that's amazing? And do you have users that love the product? And have you built a team? Are you building a team that complements the skill sets that you have, either as a single founder or as co-founder? That's what really matters.
Okay. Any final words, Rajan, which you would like to share with the audience?
No, I think, well, firstly, thank you, Saurabh, for hosting me.
About TiE, Delhi,
excited about this Paytm program that you have, and it's great to see so many founders on this webinar. Look, I know it's a very, very difficult time to be building a company. We're in the worst humanitarian healthcare economic crisis we've seen in 100 years globally. India has just crossed 5 billion cases. We're adding close to 100,000 cases a day. Obviously, everywhere you look, there's concern. I'm sure many of you have businesses that got impacted very, very deeply. But what I can tell you is, look, you should be all focusing on the long term, right? Always have a long view of what you're trying to do. Keep reminding yourself why you became an entrepreneur. And if you stay true to your mission, you really focus on your customers, you build something that customers love, you're going to be successful, right? So stay true to the mission, stay focused on your customers. So with that, we'll wrap up, Saurabh.
It was nice having you on the show, Rajan, and I learned myself also a lot of things from you. And I hope all the 100 people who were attending the webinar must have learned a lot. And thanks again for coming. And I would like to just tell one line also about TiE Delhi NCR. So Rajan is the president of TiE Delhi NCR, and I would recommend all startup entrepreneurs to join TiE Delhi NCR if you are based in Delhi. And TiE also has a lot of chapters around India and even US. So do join that, because it has been very instrumental in my career. Also, 15 years ago, I met somebody in TiE, and he introduced me to somebody, and that somebody introduced me to Vijay. So what I would say is that TiE helps a lot if you are a startup founder. And with that, I would like to end. I would like to say, build for India. Our country needs millions of entrepreneurs. Bye.
Absolutely. Thank you. Thank you so much, Saurabh. And look forward to seeing many of you at a TiE session. We have a lot of online sessions where we reach out. Okay, thank you.